buying Bitcoin at significantly higher prices than we could have done just a few months ago is always tough. But if done correctly, we can accumulate additional BTC with the best risk to reward during the remainder of this bull cycle. Today we're going to be looking at how you can best accumulate additional BTC during bull market dips, and where better to start than the short-term hold-up realized price chart we have here on bitcoinmagazinepro.com. Now what this is looking at is the cost basis or average accumulation of the new market participants, the short-term holders entering the Bitcoin markets. And what we can see if we just zoom in over the previous 3 cycles, including this one, every time price during a bull cycle actually rebounds off this line or reaches slightly dips beneath this line, it's historically been a great opportunity to reaccumulate BTC at a discount. Specifically, if we look through 2016, 2017, what we can see is this multiple times provided amazing buying opportunities. Once new market participants are back at their break-even price, potentially they're capitulating, transferring their BTC to more experienced traders. But either way, what we can see is this has worked historically very reliably. Well, we just zoom in on the current cycle here. What we can see, we did spend actually a little bit of time beneath that over the past few months early this year during our choppy consolidationary period. But realistically, if you'd have bought at any point during that time, you'd now be looking at that saying, what a great dip buying opportunity that was. So this is a first one. And I think the best thing we can do is actually, once I ran through all of these, is once you use them all in confluence, that's how you really reiterate that is a great dip buying opportunity. And one other quick thing that you probably need to do before you start buying the dip is something I maybe should have mentioned first. If we go to the MVRVZ score, one thing you don't want to be doing is buying during a bear market. What we want to do is accumulate when we know we're still in a bull market. We know that we've still got more upside room to go. So what I'll do is just refresh this chart here. Might take a second. So what I wouldn't be doing is looking to rebuy the dip once we've already surpassed this 6 value on the MVRVZ score. To me, once we surpass this value, any dips that we see might actually signify the start of the bear cycle. Here, of course, we did initially surpass this at $40,000 before we rallied higher, so there would have been some dip buying opportunities there, especially in this $30,000 or so region before we rallied again. But in general, I think if there's lots of signs that the bull market may be getting to that very overheated, overextended territory, you should be more focusing on profit taking rather than reaccumulation. But where we are now, any point beneath this, you probably have a pretty safe bet as long as there's not a black swan event. That reaccumulating probably makes a little bit more sense, especially when we're looking at favorable risk to reward conditions, which we'll cover a little bit more. Secondly, the fear and greed index, which pretty simplistic chart. A lot of people maybe aren't the biggest fans of it, but we did make a video just a few weeks ago called Does the Fear and Greed Index Actually Work?, which showed trading solely using this indicator when it's beneath 20 to accumulate, beneath or at 20 to accumulate BTC, and selling when we're at or above 80, actually outperformed buy and hold Bitcoin from the first day that this was created back in February 2018. And what we can see, these are slightly rarer opportunities, but if we just zoom in over the choppy consolidationary period we had recently, there were actually multiple instances where this dipped to 20 or below, which would have provided a great dip buying opportunity if I can find one of these dots like there. If you were reaccumulating at this point in time at $60,000 a few months ago, well, you'd think you were doing pretty all right now. Thirdly, if we look at the Bitcoin funding rates, now my favorite way to look at this is the coin denominated funding rates rather than the US dollar. Typically, people tend to use their US dollar to long Bitcoin because this is an asset that's gone from a fraction of a penny to over $100,000. So it probably makes sense to be more long bias when it comes to Bitcoin. But if people are willing to put their coin against, if they're willing to use their BTC as collateral for their positions, they maybe have a little bit more, can't think of the right word. They're a little bit more inclined to guess correctly, I guess. If you lose a few dollars, doesn't matter. If you lose some Bitcoin, things get serious. But what we can see is when this dips red, when these go negative, especially during a bull cycle, like we've seen quite a few times actually during the past year or so, these are, again, fantastic opportunities. And what I also like to do is make sure, rather than just checking the average funding rate, check specifically Bybit Exchange. This is more of a retail-focused exchange. Obviously, retail use Binance and OKX as well. But what we can see is Bybit traders historically have seemed to be a little bit more, I don't want to say irrational, but they're a little bit more irrational. When this goes negative, it's usually a fairly good indication, as long as all the other metrics pointing towards macro still being very bullish, that this is a good opportunity to accumulate. Next, we have the active address sentiment indicator, which doesn't flash too often either. But what this is looking at is that divergence between network activity, or the 28-day percentage change in active addresses, and the 28-day percentage change in price. What I'll do is, again, just isolate it over the current cycle. And what we can see is anytime this has dipped beneath this lower standard deviation band, such as over here, and then again around this area, and then again multiple times during our choppy consolidationary phase, this kind of indicates that the Bitcoin network does have a fair amount of users using it, and maybe the bearish price action we've seen isn't too justified. The same can be true for the upside, but we're talking specifically here about accumulating during dips. Maybe in the future we'll do how to best take profit during a bull cycle. But this is another great metric to watch, especially when we cross back up above this standard deviation band to the downside. If I just specifically look here, for example, here when we dipped beneath, once we cross back above, that's a good indication that we've got more network activity, prices rebounded in a slightly more positive fashion, and that hopefully higher prices can come. And finally, the Bitcoin Crosby ratio, which on its own I think works great, especially on a more macro basis. Here it looks a little crazy, I'll admit, but if we just isolate again over the previous couple cycles, we can see this is accurately called major market peaks and local peaks before we have maybe just a little bit of retracement. But once we get into these lower regions, it provides unbelievable buying opportunities. However, just looking at this chart, which is using the daily data, we can see that there hasn't actually been any buying opportunities according to this metric throughout this current bull cycle. In previous cycles we did, but currently we haven't had one. But to me, the Crosby ratio isn't best used on the daily chart. What we can do is, if you have access to this, you have access to our TradingView indicators as well. I actually prefer to use it on something like the 4-hour chart. So I'll just adjust TradingView so you can see that. So what we can see is you get considerably more good opportunities to reaccumulate during dips. All through this choppy consolidationary period, we had dips into this lower region. And even just before we had our initial run up to 100K, you'd have got in around here. And then I think it just dipped in there before we had our big rally up from around $69,000. And again, this isn't just isolated to our current cycle. If I just zoom out and scroll all the way back to 2017 and 2020 as well, but I think because our current most comparable cycle is that 2017 cycle, it's a good way to really check and reiterate that this is a good dip buying metric. What we can see is from pretty much all the way through this bull cycle. And what we can also do is, if we add on a, for example, yearly moving average to, again, maybe just define when we are in a bull cycle, when we're in a bear cycle, for example. In this period, you probably don't want to be accumulating too much on each one of these dips, because chances are we're going to go down 60-70% or so. But through the bull cycle, what we can see is, as Bitcoin was rallying, you would have ample buying opportunities all throughout this rally to the upside. At times, what would feel like potentially irrational fear, but what we need to do is just look at a data-driven approach, especially, unfortunately, we don't have fear and greed and funding rates data going back this far, but especially once all of these are showing very similar indications that we've had a little bit of an overextended move to the downside. We're still not in incredibly overbought, overextended upside conditions, and they're all flashing that now may be a good opportunity to reaccumulate BTC. It's probably a good opportunity to reaccumulate BTC. When we talk about risk to reward, if I just remove the drawings here, of course, if you entered Bitcoin, this is in 2017, if you entered the Bitcoin market around here, for example, then you'd look back and say, I don't really want to buy at $3,700, $3,000, $4,000, when I know only a few weeks ago we were down here at less than $2,000. But if you were buying at this point up here, when Bitcoin was still only $2,000, so granted, you would have got in cheaper, then you'd have been bought in incredibly overbought conditions, and you'd have had to experience these big drawdown periods where Bitcoin does retrace 20, 30, potentially even 40%, even during a bull cycle. However, if you wait until the odds are more in your favor, even though price is considerably higher, if you're accumulating down here, once the Crosby ratio on the 4-hour is in this oversold territory, then you have some reassurance and confidence that if you're scaling in at that area, you're probably not going to have to experience another 20, 30, 40% drawdown, which, especially if you're a new entrant, or really it affects anyone, doesn't feel great. And then beyond that, even though you were buying higher, the risk to reward was considerably more in your favor. the additional downside you could have experienced at this point in time was significantly lower and the upside potential was significantly higher. So rather than just thinking in dollar terms, you need to think in percentage and risk to reward terms to really try and accumulate at the most opportune moments rather than just buying willy-nilly. Of course, if you're DCAing every single month, this might not be as relevant, but it's still probably worth keeping a little capital to the side just to make sure when these rare opportunities do occur that you can really take advantage. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, accumulating during bull cycles is tough. Of course, when you're buying at higher prices than you could have gone on just a few weeks or months ago, it feels like you're getting a worse deal. But like we said, you need to think of this in terms of risk to reward and percentages rather than just pure dollar amounts. It's much nicer to buy at a slightly higher price after a retracement, knowing that the chances of further retracement are much slimmer than buying after a big rip to the upside and then having to experience a 20, 30, 40% drawdown, especially if you're not just buying and holding forever, because at some point you do maybe question yourself and think, do I need to sell and buy even lower? It happens to the best of us. But what we need to do first and foremost is identify that we're still, type that in wrong. We need to identify that we're still within a bull market, not a bear market. Don't do this in a bear market. In a bear market, we're trying to catch the macro lows. This is specifically for reaccumulating small percentages during a bull cycle. But what we need to do is make sure that we aren't in overbought, extreme, exuberant, irrational territory, like we could see the MVRVZ score, when that is getting incredibly high. Beyond that, we're probably not looking at more dips. We're probably looking at a bear cycle. So make sure that the market conditions are still right. And then what we need to do, like we could see with not just the funding rates, the active address sentiment, the Crosby ratio, short term, and fear and greed, what we need to do is just identify the irrational fear, the irrational feeling in the market, find these good risk reward opportunities and scale in just with small percentages. Again, I would never use any of these strategies to go 100% in because I've missed an opportunity a few months ago. As with scaling out of our positions, we should be scaling into our positions just a few percent at a time, as long as it aligns with your risk management and strategy. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on how you reaccumulate during Bitcoin dips in a bull cycle. Do you even bother, or do you think you maybe managed to get all in at $15,000 and you're just happy taking a few bits of profit here and there? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. I hope you all had a lovely Christmas and I hope you all have a lovely New Year as well. Thank you all very much for watching, and I'll see you in the next one.